Hello, ladies and gentlemen. Welcome back to Commercial Real Estate Secrets. I'm your host, Austin Hare, and today our guest is Ketan Patel. He's a high-performance real estate coach that helps with motivated real estate entrepreneurs create more income and impact by aligning their mindset, strategy, and execution. He's also raised over $10 million for his multifamily syndication, and it's only going to grow from here. So, Ketan, it's a pleasure to have you on the show today. Welcome, my friend.
Austin, thank you so much for having me on the show. I'm very excited for our conversation today.
Yeah, my pleasure. So, you and I were chatting earlier. We got a lot of similar interests just in terms of like Tony Robbins and mindset and motivation and stuff like that. So, for you, how did that whole process unfold? Because I know you said you're originally from India, right? And you just moved over here in 2006. So, did you know about motivational, coaching or mindset strategies or anything like that when you were living over there?
No, I had no idea that there's a whole thing called mindset, right? Or your thoughts or your emotions, or there's a thing called strategy. I had no idea about that world.
Wow, interesting. So, how did you get introduced to all that?
So what happened was, I came to this country, started learning English, got my doctor of pharmacy. I'm practicing pharmacy, and I started questioning life, right? I realized that, the mind is always trying to tell you once you get to this point, you'll be all set,
Mm,
making X amount of dollars or getting a degree or a job or
right.
whatever it is. But I realized that that's not the case because every time that needle keeps moving. So I need to start investigating this thing further. So started reading books and started questioning life and all of these things. And I realized when the student's ready, the teacher presents itself, right? The opportunities come. And for me, it was real estate. And original goal was to grow the real estate business. And that's how I got into mindset and all of these things. But then I realized that I love this stuff so much. I'm so much interested in learning more about my own psychology and what are my beliefs and what do I really want from life and all that.
Interesting. So, you said you got your doctor of pharmacy. Is that correct?
Yes.
But you always wanted to do real estate long term. So, was that just a means to an end or what?
No. So originally the goal was just the pharmacy, and as I'm practicing, I'm realizing that my values are not in alignment with what I want to do. My values are freedom, entrepreneurship, creativity, and innovation, and that has not much room in pharmacy. And I asked myself, what if they pay me $1 million a year? Me drink as much coffee as you want. You could come in when you want, leave when you want. Would I do the job? And my answer was no. And that really made me think, what's going on here? What do I really want? And then I'm like, I need a business or I need a venue where it's fun for me that I could just explore. It's numbers related. And that's how the whole thing started.
Oh, cool. Cool. And so, you got your doctor of pharmacy. You started that track in 2006. And when did you graduate?
So I graduated in 2011.
Oh, wow. Okay. So, you're over here for like 5 years. Yeah, I graduated college in 2012. So, kind of similar. So, was it like at what point was it that you realized, okay, like I would rather do, what year was that when you're like, okay, I'd rather do real estate. I'd rather be focused on that?
Yeah, so I realized that it would be nice to have another income stream, right? That was the initial thought process. So that way I have the opportunity down the road if I want to cut the hours, quit the job, whatever I want to do. So I started thinking about that pretty much very soon into working life because I realized just the corporate life, the growth is just not going to jive as much. So I ended up in 2013 buying a single family property just like as a test run or the first action, and then from that things started to take a different direction.
Cool. That's cool. So, yeah, the way we kind of talk about it is three steps, which is like, your first step is usually a single family unit, like residential, because it's easy to secure financing. The numbers are relatively smaller. Coming up with 10% down is usually very doable for most people. And then the next step is usually like a multifamily, which would be, or a multi-unit, right? So it could be a duplex, triplex, quadplex, something like that. And then the third step, usually lastly, is commercial real estate, where that could be like multifamily. We're talking apartment units, could be retail like we do. It could be warehousing, industrial, medical, self-storage, whatever. But it's like that first step, usually we find a lot of commonalities. People start with that residential sort of get their, their feet wet, so to speak. So what was that process like?
Yeah, I agree with you 100% because, it's helping to basically learn how to walk, right? Before
Yeah.
you start running. So basically, that first family, it was challenging, only needed $25,000, but I didn't have much savings at all. So I convinced two of my pharmacist friends to come up with $8,000 each. And
Nice.
then I decided to put all of my money into 401k, which was doing a match, and I was able to pull that out. And
Ah,
I learned that in this real estate journey or business journey, we'll always get those a fork in the road where we'll have the excuse of, hey, I don't have the money, I don't have the knowledge, I don't have the network, I don't have the opportunity, or how can I be resourceful, do something about it? So then I bought that property. After that, bought a couple more singles, and then, like you said, step two, started buying 3 unit, 5 unit deals. And then after that, I realized that making extra real estate income, it's not that difficult because now I'm in that realm. But what's important is, what are my long-term goals and what is my strategy to get there? Because without that strategy, just making some income is not really going to help us. And then I realized that to really get there, I need to get into the multifamily syndication, where everything is at scale. So the
mhm.
step number three, so to speak.
Yeah. Yeah. And explain multifamily syndication for everyone listening.
Yeah, so for basically the basic concept of multifamily syndication is, let's take a 200, 300 unit apartment complex that's worth, let's say, $30 million, and we need about 10 million in equity. So LPs or investors would be basically investing in the deal, and GPs or the general partners would find the opportunity. They have the expertise to run the analysis, to execute the business plan. Typically, value add business plan, what you're doing is you're bumping up the rent by renovating the interior and the exterior, making sure the operational inefficiencies are removed, all of those things, using rent maximizing softwares and all of that stuff. So doing all of those things would increase the NOI of the property, which means the value of the building would go up. So that's the basic value at multifamily syndication concept.
Yeah. Okay. So when you say syndication, you are acting as the GP. You're getting essentially originating the deals, finding the opportunities, raising the capital, and then executing on the project.
Yes, absolutely. And there's a GP team. So, it could be 2 people, it could be 5 people, and they divide the roles among themselves based on their business model and how much portfolio they have, etc.
Okay. Um, and then how do you typically do the GP LP split, like the general partner, limited partner split?
Yeah, so that's a very good question, right? So typically, a lot of times people focus on the numbers, like the 70/30, 80/20 split, but I highly encourage to focus on what the overall pie looks like, right? So if it's an excellent opportunity, the 70/30 split might be fair to investor if your partner's experience, it means they have done exits, they have proven the plan, they have teams in place like acquisitions manager and asset managers and things like that, versus somebody offering you 80/20, but you are rolling the dice, so to speak, because they have only bought the third apartment complex so far and they are testing it out. So I would encourage, so the splits are typically 70/30, 80/20. There's all kinds of ways, but I would encourage investors to look at from a global perspective. What are you getting for the fees that you're paying, the splits that you are paying, and then make a decision if it seems fair to you or not.
Okay. So, how many, like, either residential, single family, or multifamily, like multi-unit properties did you buy before going full on, multifamily commercial real estate?
Yeah, so I had done about like a dozen deals, over a dozen deals, and I've done some flips and things like that as well. But I knew that the time and the energy it took to find that 3 unit or 5 unit deal is just enormous. And every time it has to be repeated, right? Every time I've closed on the deal, now I need to find the next deal. I need to figure out the financing, the equity, the debt. I need to the closing part. And I'm like, if I keep repeating it, it's just not sustainable. It's not a good strategy.
Right. Yeah. It's like the amount of time that you're going to spend on one, 2-unit duplex is almost the same amount of time you can spend finding a 30 million multi-family unit.
Yeah, like more or less, of course, that's a different business with more involvement, but from 2 unit to like 10 unit, 20, 30 unit, it's not overall the scale comes in your favor, and it's much easier on a longer term of time frame.
Yeah, exactly. And that's one of the things we talk about too, like why we recommend, single family residential first before you scale up is because you get to a point where it's hard to scale the single family business because a house that costs you 100,000 might, you might be able to collect $10,000 a year in rent, right? Like around 10% or whatever. A house that costs $1 million is most likely not going to be paying $100,000 a year in rent. You know what I mean? It's very unlikely people that pay more than $10,000 a month
Yeah,
for
yeah,
their
yeah.
rent or in their family. So it's like it just doesn't scale the same way. And that's why at some point, you like you said, you're spending all this time and effort originating deals, looking for deals, but the upside is limited. So if you switch, you have to kind of make a transition because only way to really scale through single family is just keep buying more and more and more and more and more and more units, which that's possible, but you can get the same kind of ROIs on those smaller deals in commercial real estate, in terms of actual percentages, right? So
Yes.
yeah, that's why we like commercial, right? Is because a $1 million property will give you the same ROI as a $10 million property, right? It scales equally because it's all about that net operating income. And
Yeah.
obviously, businesses, it is common for them to pay $10,000 a month in rent or more, right? So
Yeah.
yeah, that's cool. So talk about the first, like when you finally stepped out and you did your first multifamily, syndication. What was that like?
Yeah, so the first one was, so to speak, challenging. I had been an LP investor before I brought any investors in, so I understood I'm a numbers guy. I understood the strategy, from the point of numbers and how it looks like on the book, but I'm not sure how this would be actually executed and things like that, right? So communicating with investors, getting the commitments, putting all these things together for the first deal was challenging. But the more I started doing it, I realized I enjoy doing this thing so much. I enjoy learning about it. And I realize any new venture we do, we're always going to have these challenges and the things we haven't done. But if we feel connected with it, then it's much easier to move versus doing things that are not really that fulfilling, so to speak, right? And after that, it became much easier because I started to know what to look for in the deals, what to look for in the numbers, what are those potential risks, and how does the return compare with it, and also started to experience for myself how passive investments look like, because I've been always active
Mhm.
managing my property, managing the flips, or managing the management company. Something's going on, and I started to realize there's only so much time in the day. So sometimes it just makes sense to do these passive investments where I cut the check and I'm not really doing anything else, so to speak, right?
Yeah, yeah. And so can you disclose any of those numbers, like, how many units it was, how much money you put down, what was the ROI you guys got?
Yeah, so the first one of the first deal that I invested, of course, just want to throw a disclaimer that every deal is different, every
Right.
opportunity, every market. But as an LP, I was able to make 35% return
Okay.
annually,
Over
and
what
it
time?
was
Annually. Nice.
over two. So that was a heavy
Sorry,
value add. The
broke up for a
property was
second. You
bought
said
at
it's 20, 35% each year over 2 years.
yes, two and a half years to the
Okay,
time it was
great. And then you
exiting. Yep.
guys sold that property or you refinance or what happened?
Yeah, so the property was sold. It just made sense at that price point to sell and things like that. And, with value add multifamily, typically the ranges go, typically, right? The overall range goes from 16 to 20% annually, out of which you get that 7 to 8% on a cash flow basis when the property is in the operation. And we are hoping for the upside by changing the NOI. So that's the standard value add multifamily. But again, it would depend on the particular team that's executing, how much value add you're doing, and how much risk you're taking in repositioning the tenant base and the geography and all of that stuff.
Okay. So that first one you participated in as a limited partner
Yeah.
and you saw it went really well. You were interested in it. When did you decide to make the switch to start, doing the syndication and acting as the general partner yourself?
Yeah, so my goal when I made the LP investment was to be the GP, but I figured before I bring people on, let me just kind of test it for myself. Let me see
Yeah.
how it feels like to be on the other side of the equation, and just start getting learning on that side too. So that was that first thing, and then 6 months later, I started becoming a GP with a bigger group because we were offering this bigger deals with so many moving pieces and things like that, and I just committed to bring a certain amount of money to that deal and slowly progressing into the GP role.
Mm. Yeah, that's cool. And so what was your second deal like? Were you said you were kind of like a mix between an LP and a GP at that stage. What was the size of the apartment complex?
Yeah, so the second was, 250, 260 units. So the group I work with, they are focused in the sense of only buying, 200, 250 plus, C plus B minus in the DFW area, so to speak. Just having a narrow defined strategy, which I like,
Mhm.
because if you try to buy 50 unit and 300 units the next day, the operation styles are different. The numbers work different, the value add strategy works different. So ideally you want to be familiar with the particular kind of multifamily product you're working with and things like that.
Why the focus on the C plus B minus demographic?
Yeah, that's a great question. So, what happens is with Class A, they're paying premium rent, newer property. So, anytime there's going to be a slight pullback, downturn in the market, those people would move into lower properties, right? Or they might not be able to afford, let's say, 1,700 rent for the two bedroom. They might be able to afford 1,300. So that's that. Now, if you go all the way down at Class D properties, they are distressed. The occupancy levels are going all over the place, which means your cash flow projections can become a little tricky. And what happens is a distressed property that's at 65% occupancy, and you're trying to renovate the units and move it up to 80 or 90, you are repositioning the tenant base. If they are paying 600 in rent, you are trying to get $1,000 in rent. That's a big gap. And I'm just using numbers for illustration. But the point is, in the risk increases, of course, the reward increases as well. And there are some people who really specialize in that niche, and they do great at generating returns, but typically it comes with the bigger risk. So the middle piece, the C minus B plus, what's happening is you're not the vacancy when we buy these buildings is already at like 5 or 10. So the occupancy is already 90% or plus when we are buying it. So we are not expecting huge fluctuation. And then the rents, let's say if they're 900, we are focusing on 1100. We are not trying to jump from 900 to 1500. So
You're talking
with
about when their lease renews, right? The next
yes,
time it renews.
when the lease renews and when we put $5,000 or $8,000 in the unit, we are doing cosmetic upgrades and things like that. So less unknown in terms of cost, in terms of times, versus doing major upgrades and things like that. So because of all that factors, the risk reward ratio in that space is in the middle versus it being in high risk, high return like Class D. And that's why I like that space, and that's like a popular space.
Okay. Yeah, yeah, it makes sense. You're not paying that premium for those A grade units, but the occupancy level is still pretty high. So, and when you're putting in like the $8,000, you said, I'm guessing that's not in every single unit, right? You got to wait till there's vacancy, wait till there's turnover before you come in and fix them up.
Yeah, so that's a great question. So typically, the what we try to do is we do comp analysis and ideally find properties in the neighborhood that are getting upgraded and getting that rent premium. And the closer we get to it, the less execution risk we have. So when we buy like a 250 unit property and let's say 10% units are renovated, the 90% are not. So we renovate, we budget, we do everything accordingly. But as the leases turn over from those vacant units, we move people over from old units to new units. But we are not having all them, all the leases expire and then the property is closed, because that wouldn't support like carrying the property and things like that. So, and this also gives us flexibility in case if we are not getting the rent premium, or an event like COVID, it's just like, okay, let's pause the renovation for now.
Okay. Do you have a target cap rate that you look at to buy and a target cap rate that you look at to exit?
Yeah. So with these kind of deals, what happens is we really have to rely on the market as well, because these are highly efficient business models where, if the market's trading at 4.5 cap, you wouldn't find a property at 6 cap, right? Because people who are selling these buildings, they are very savvy too. So it might be a 50 basis point plus or minus. So what we focus more on is the cap rate is in line with what people are paying. But rather than cap rate, the more potential is how much rent can we increase. So let's say you buy a property at 5 cap, but you know that the rents are under market and there's a demand in the market for an upgraded product, and you are confident on those numbers, that would be a solid buy. Versus a buy that's at 5.5 or 6 cap, on a cap rate basis is attractive, but we don't have that NOI growth potential if you compare it, apples to apples.
Mm-hmm. Yeah, I know as like real estate investors, right? Like as your full-time thing, we're always eager to find the best cap rate possible. And I've been talking to so many people lately about COVID, like since COVID, just waiting for those deals. Like, oh well, after the moratorium is up, or once this all gets settled into the economy, but we're gonna wait for all these deals, blah blah blah. And the problem is that I feel like that's a situational occurrence. Like in places where there was like heavy lockdowns, like very draconian style, like we're talking about like New York and California and Illinois and Chicago and stuff like that. Yeah, their economies are really suffering, right? Like you could potentially get a good deal if you wait for those moratoriums to come up. But places where you've been open this whole time, like Florida, Texas, Tennessee, South
Yes.
Carolina, North Carolina, all those places, I mean, the economy is doing really well, like really well. And so you combine that with the fact that we've got all this Federal Reserve helicopter money just flying out the window everywhere, and there's a ton of cash, vying for returns right now. And I just don't
Yes.
think if you're in good markets, like if you're in healthy markets that like didn't have too much lockdowns, you're not going to find any. It's gonna be really hard to find good deals because everybody's investing
Yes.
right now. Everybody's loaded with
Yes.
cash. Everybody's trying to get a return. And so a lot of the institutional investors that are passive, like completely passive, they don't mind paying the lower cap rates because they want to be totally hands-free, right?
Yeah.
But now, even as real estate professionals, we're gonna have to start essentially accepting lower cap rates, I think, because
Yeah.
that's what the market is
Yes.
commanding right now, right? Like
Yes.
there's so much cash on the sidelines. And so but that's why it's interesting. I agree with what you said. You got to look for the value add, because you're not really going to get
Yeah.
you're probably not going to get a deal on the front end. Now those are going to be few and far between. But
Yeah.
what can you do to these properties? Like how have they been underutilized in order to where you can really start to see a good return?
Absolutely. And I agree with what you said, right? You might, all this money is chasing deals, and at certain point, we have to flow with the market. And here's the thing, it depends your strategy. If you are an individual real estate investor, and if your business model is just to be opportunistic and find these deals that are, under market, you can do that. But on a long-term basis, it's difficult to scale that business model. It's difficult to find those investments where they are above average return, so way above average return, and that could be your thesis and you could work on it. But also the investment is a long term game, right? So ideally figuring out good opportunities where your capital would be secured and you're making healthy returns and getting the tax benefits, and you compound, looking at it from a longer perspective as well. Versus if you're sitting on the sideline for a year or two, we are not calculating the lost opportunity cost, the time that's going away, that it could be generating you the yield as well, right? So
Yeah.
yeah.
Yeah, that's cool. So, and talk to us about your coaching business. Like how did you get involved in that? Like what, I'm curious to learn more about what that looks like.
Yeah, so after the senior care business, I'm growing in real estate, and initially I jumped into Tony Robbins and everything just to improve my real estate business. I figured, I'll be a better entrepreneur, but then I started realizing that I really enjoy these things, and I'm having casual conversations with people, and they find it very impactful, and they use some of the strategies, and they are getting results. And one day it hit me, that at the end of the day, the goal is to be successful and also be fulfilled, right? And how do I do that? And we all have different outlets to do that, but for me, coaching really aligned with me. So then I decided to, work on the coaching piece as well, and started offering the coaching services.
Mm, that's cool. So like, what is that like? What's the like? What types of what do you see generally with people when they come in, and like, what do you focus on in terms of mindset?
Yeah, so the biggest thing is just the beliefs and fears. So whether it's a physician that's looking to grow his investments or have a real estate business on the side, or if it's a real estate entrepreneur that's working on raising more or more capital, the common bottleneck for a lot of folks is the beliefs that they are not aware of, that are not serving them. And when our beliefs are not in, when they are not serving, we are not going to take the action, we are not going to get the results, and the loops keep going on and on. And people spend so much time and energy with those little challenges there. So I'm outside from them, right, and they are hiring me, I could give them that honest feedback in terms of those beliefs. And then fear as well. Like for me, it was difficult to leave a comfortable job of pharmacist, having all the student loans, buying a business which when I even had no money, right? Coming to this country, all of these things. But I've realized every time we push on that fear, we are growing. There's so much we are learning. We are making more income. We are touching more people. So just showing the clients the possibilities and giving them tools and strategies that they could start applying in their daily lives. And then everybody's situation and results are different, but the mindset piece, more or less, this is what I could summarize with.
Yeah, yeah. And we've had several people on the show actually where we talk about mindset and we talk about your attitude and how much that plays into it because um like that's one of the first things that really you have to get down in order to help set you apart. Now, of course, you can become very successful and be very negative. You can earn a lot of money and be pessimistic and all these types of things, but it's not as fun, right? Like who nobody wants to do that. And B, I'm very convinced that like you will make more money and you'll be more successful than you would be with a negative mindset. So, it's tempting to look at these people who do really, really well and say like, oh, well, they've got a negative mindset. He's got a net worth of $100 million. Look, he did it. Like, I don't need to invest or I don't need to worry about my mindset or positive beliefs, whatever, because that guy did it. But that's not the right way to look at it. The question is, how much further along could he be if he had a positive mindset, right? Because if we compare ourselves to others, we're always going to be unhappy. But the thing is,
Yeah.
within your individual life, if you can generate a mindset of abundance, of positivity, you can go further than you can with a negative mindset, right? And that's just the fact. So I think that like there's certain tactical things too that people can do. I'm a big Tony Robbins guy. Another guy that I follow is Alex Sharfin. There's a lot of things, but one of them is like one of the commonalities I hear is that morning routine, right? Like wake up in the morning. With Tony, it's priming, which is where he focuses on his goals, like his long-term goals, and he visualizes actually completing them for like, so it's between 3 and 8 minutes or something, where you're just kind of putting you're becoming grateful, and then you're putting yourself in the future, imagining you've already accomplished those goals, and that one is super super powerful. And another one is just meditating. You know what I mean? Just closing your eyes for 3 minutes, whatever it is. It doesn't have to be very long, trying to get rid of all your thoughts, all your worries throughout the day. And I mean, there's so much science backing those types of things. And it's like, there's a temptation to be like, oh, like, I don't have time for that. Like, that's a waste of time. I'm an entrepreneur. I got to get things done. But
Yeah.
I mean, you actually get so much more done when you're centered like that.
Yes, absolutely. You hit all the good points. At the end of the day, the decisions you make or the decisions you don't make flow from the state, what you are feeling, your emotional state. And you wake up, and if you're in a hurry and you are in a state where you're disappointed, you are not certain, you are going to avoid a lot of decisions that are going to keep you progressing. Or you might not make, and I'm sure people have experienced this all the time, where it was a tiny thing, it wasn't even a big thing, but they weren't feeling good, they were in a good state, and they catastrophized it to be such a deal. Or it works opposite, where
Yeah.
you're in such a good state that you got really bad news, but it didn't matter to you because you were in a better state to handle that. So the morning routine's the best ROI, that 15-30 minutes, the hour you spend just to get in a peak state, because then remaining of the day you could make better decisions, and the decisions will dictate your behavior and action, and which will kind of give a feedback loop to everything, right? So highly recommend. And everybody's different. Some people like breathing exercises, some people like Tony Robbins priming, some people like gratitude journal. The key is to do something that changes your state. You could tell that I feel more optimistic, I feel aligned with possibilities, and I'm excited about the day. And here's the question, right? At the end of the day, if you live your life in a way where most of the time at your work you're happy, you're inspired, and you don't even care about the results, that's when things would happen. And that's what we want deep down, because otherwise, you could have the money and you're getting results, but if you're not feeling grateful, love, inspired, connected, what's the point of it all? Because that's what you think that being successful is going to give you. It's going to give you the freedom, it's going to give you your recognition to yourself and all that, right?
Yeah. And, when we're so focused on the outcome, it actually sets you up for failure,
Yeah.
because two things are going to happen. Either you are going to achieve that outcome or you aren't. But even if you achieve it, then it's like, then what? Right. And so that's happened to me a couple of times in my life where I was so focused on the outcome that once I achieved it, it was actually very depressing. So I remember like I was a professional wakeboarder, and I wanted to win the nationals, right? And that was my goal for like such a long time. And so I went out there, I did really well, I won it. And I remember the next day I was like depressed, right? Like I just got this huge victory, like it was aired on national television, and everybody was congratulating me. And like the very next day I went out there to wakeboard, and I just had like this emptiness feeling because I didn't have a goal set up after that. It was the same thing. I owned some fitness centers. My goal was to sell them, and it was a franchise. I really didn't get along with the franchisor. I mean, he just was like not a good person, right? Like not a nice person, not a good businessman. And I was so focused on that conflict, on getting out. All I could focus on was like how miserable I was and how badly I wanted to be done with that, right? So I kept my head down. I grinded. I was able to sell like for a good price successfully. The second I sold and I was free of that burden, bam, depression. And so it was like because now I had a lot of money, I had a lot of free time, and I had like no direction, right? And I just solved this problem, and I didn't have any new problems. And so I realized like, it's not about solving your problems. It's about the progress. It's about the journey. And it's so cliche, like, oh, it's not about the destination, it's about the journey. Everybody's heard that. But what that means to me is like being grateful for the struggle, right? Being grateful for the grind, because after I sold those companies, it took me a while to figure out what I was going to do. And then I started getting into commercial real estate. And I remember like actually being grateful for stress. Like I remember being grateful that I had a lot to do, because I remember being grateful that there was like more on my plate than I could get done. And I was feeling busy and like running around, like where before I would get irritated by those things. I was like, you know what? This is like, I'm grateful that I have this direction, this purpose right now, because that's immensely better than being empty. And so it just helps with the whole mindset, right? Like be grateful for what you have. It's not about accomplishing these goals. It's about the progress, making progress towards accomplishing these goals.
You hit on like a amazing topic. I went through that as well, where I bought a business, turned it around, where I had to work 1 day a week. I have all the freedom in the world. What happened? Nothing really changed after a month, and so many people get into this trap thinking that once I make that X amount of dollars or get there, and nothing wrong with it, right? I'm all up for having bigger goals and chasing, but the point I'm trying to make is, if you practice feeling and thinking certain way all the time, getting to that one point and doing that exit is not going to change anything, right? After that day or week, that high is going to wear off, and your natural tendencies, the way you behave, the way you think, your beliefs, it's all going to come up, and then you'll be back in that safe space. So the better way is to questioning yourself and taking an inventory of, how are you feeling, what are your thoughts, and start to work on reprogramming that mindset. Because once that changes, now you're don't looking for that you have goals, you're working, but you're happy either way. And that's when your progress is even faster. And even
Mm-hmm.
if you don't get there, you won't care, because you're already feeling relief, you're already enjoying everything that you're doing.
Yeah, and it's funny because that's the goal anyways, right? The reason we set those amazing goals, ambitious, high money, network, and like prestigious goals, because we want to feel a sense of accomplishment and happiness and fulfillment.
Yeah.
And it's like you can get that right now today, right?
Yeah.
If you celebrate the progress.
Yeah, absolutely.
And so I think generosity is important too, right? Like giving back regardless of how much money you have, like, so um that just gives you an abundance mindset, right? Like whether it's to your church or whether it's to like sponsoring kids, or like we like to deal with Compassion International, like where we sponsor kids in third world countries, but just something to where you're actually doing good, because obviously it's good, but also it gives you a feeling of abundance, and it gives you a feeling of generosity that creates this virtuous cycle, but yeah, that's cool that we're in alignment about all that. So for anybody who wants to, they want to get in touch, they want to learn more about the multifamily stuff that you're doing, they want to learn more about your coaching, like what's the best way for them to reach out?
Yeah, sure. So I'm active on LinkedIn, and I do have a YouTube channel with a lot of helpful videos. And I could share links for my website, Ketan Patel, for anybody who's interested in coaching and anybody who's looking to learn more about passive multifamily investors. I could talk about Mookie Capital. That's my other, and I'll share the links with you.
Okay, so it's ketanpatel.com.
Yep. And
Okay.
then the other one is Mookie Capital.
Okay, yeah, I'll write that down for the show notes. But just you can go ahead and spell it out though for everybody listening.
Sure. It's MUKHI, and then it's the word capital, CAPITL.com.
MookieCapital.com.
Yeah.
Okay, cool. Yeah, I will put those down in the show notes. And yeah, it's been great having you on the show. Thanks for all the wisdom, all the information about mindset and multifamily. It's been very educational.
Yeah, thank you so much for having me on the show, giving me the opportunity. It was awesome to discuss along, the shared topics, and it was fun. Thank you.
Yeah, you're welcome.